Hello, and welcome to Stay Strong. My name is Nancy Tyree. I'm the Agency Initiatives Manager at the Indiana Department of Revenue, and I'll be guiding you through our presentation today, which is the second in a two-part workshop on small business taxes in Indiana. This presentation is focused on compliance and some more complicated topics that established small businesses and those further in the formation process might need to know about. Everything I'm going to be sharing with you today is accurate and up to date to the best of our abilities. The goal is to provide general information, and everything I share with you is subject to change. It might change between when you watch this presentation and when you eventually need to put it into practice. So later on, I'll talk about the best ways to find information and stay up to date, just in case that ever ends up being the case for you. Along with this presentation, I also recommend you check out the Indiana Tax Handbook for New and Small Business Owners, which gives more information about the topics that we'll be covering today. That includes things like what the Department of Revenue is, a short recap of Start Strong, remote seller rules, use tax rules, information about audits and liabilities, what happens if you ever need to change or close your business, and we'll share a few resources before we close things out. Before I jump in, let me tell you a little bit more about the Indiana Department of Revenue, also known as DOR. DOR is the tax revenue agency for the state of Indiana. There are many things we do here, but what I want to stress, the most important thing we do, is our job is not to collect taxes. It is to support taxpayers. We believe the more knowledgeable that you are, the better everyone is, the easier our job is. So think of us as your partners in tax compliance because that is how we think of you. But enough about us, let's talk about you and your business. To begin, I wanted to quickly look at a few items we covered in our Start Strong presentation in case you missed it or it's been a while since you watched it. This presentation, Stay Strong, is a sequel to Start Strong, which is aimed at those who are earlier in the business formation process, maybe haven't even started their business yet, and covers a lot of pertinent tax information for new and small businesses, including business structures, registration requirements, some of the most common tax types for business owners, how to file and pay those taxes, and some basics on staying compliant. We talked about how you can use InBiz to register your business with the Secretary of State, the Indiana Department of Workforce Development, and DOR. This is usually the first step you need to take to get your business registered in Indiana. But even if you've already gone through the steps of registering your business, InBiz is still a useful resource for ongoing actions you may need to take to stay compliant with various state agencies. For example, these are the most common tax types a new business may need to register for, and they are all on InBiz. If you've already completed registration, InBiz allows you to register for different tax types and different locations at a later date. So if your business changes or expands, you can alter the records in order to get into compliance after you've registered. And you can also register for new tax types and locations directly on InTime. Speaking of which, InTime is DOR's e-portal for filing, paying, corresponding with us, and much more. There are many things you can do on InTime, including registering for new tax types, changing a business location, viewing and responding to correspondence from DOR, getting online customer service support through secure messaging. You can also file, remit, and pay several types of taxes through InTime, including sales, use tax, which I will be covering in a bit, withholding, food and beverage, county innkeepers, and even your corporate income taxes, along with many, many more. Another thing we discussed in the last presentation is when you need to file, which depends on many things, such as which taxes you're remitting to begin with, if you're a calendar year or fiscal year filer. And for taxes like sales and withholding, some businesses are annual filers and some are monthly. It depends on the amount you typically owe. See the link on this slide for a list of due dates for different tax types throughout the year, so you can see all of the due dates that would potentially apply to your business and know when all of them will be due. Now, those were the basics of Start Strong, so we're ready to dive into some new topics. And before we move on from payments, I wanted to discuss estimated payments. If there's no withholding on business income, you may need to make estimated payments to avoid a penalty. This is most common for sole proprietorships. It can apply to other business structures as well. Those with unpaid tax liabilities of $1,000 or more in Indiana AGI or county tax must make quarterly estimated payments in April, June, September, and January of each year if you're a calendar year filer. This means you pay the total amount that you owe in even installments throughout the year instead of all at once in April. If you need to make estimated payments, I would recommend checking out the link on this page of the slide that goes to our website and talks more about what they are, how they work, and how to get set up with them. Now let's talk about remote sales. So this has some potential impacts on those of you who do business across state lines, which might be more of you than you would expect. Indiana has some special rules for retail merchants who are located outside of Indiana. They are required to collect and remit Indiana sales tax if they sell into Indiana. But they only need to do that if their gross revenue from sales into Indiana is more than $100,000 in either of the last 2 years. If your business makes sales into other states, be aware, not all states have the same rules for remote sellers that Indiana has. So you may be dealing with other rules when it comes to sales you make into those non-Indiana states. This is especially important for those of you who are or will be running an online business because your customers can be located in many different states with many different remote seller rules. These rules can be quite complicated to navigate. When you're going to have to collect and remit sales tax for different states is complicated. One resource we encourage you to check out is the Streamlined Sales Tax Program, which was created to help businesses comply with their tax obligations to different states. Essentially, what this program does is it allows you to register and pay sales tax in participating states through one application, rather than having to register with each state individually. Now, Indiana is a full member of the Streamlined Sales Tax Program, along with many other states. So if you get registered with them, you will know that Indiana sales tax is being handled appropriately. Some businesses will qualify for free sales tax calculation and reporting services through this program, which is a really excellent deal. Even if your business does not qualify for that, it is a good resource for finding remote seller rules in other states. I'll give you a link to their website in just a bit, so consider checking them out. Another factor to be aware of is the impact of marketplace facilitators. Now, marketplace facilitators are businesses or people who own, operate, or otherwise control a marketplace and facilitate a retail transaction. What does that mean? Well, if you're selling your goods out of state through marketplace facilitators, and two really common ones are Amazon and Etsy, so let's say it's one of those, you don't have to worry about collecting and remitting sales tax because those platforms are considered marketplace facilitators and they handle that for you. You just need to keep track of those sales so that you have a record. And when you remit your taxes to us, you'll indicate which sales you made through a marketplace facilitator so that we know what you owe versus what they owe, and we can make sure that they are staying compliant. Be aware, there are some tools and online platforms that help sellers keep track of where sales are coming from so that they can apply the correct sales tax rate, which is very nice. But these are not marketplace facilitators because they don't actually collect and remit the taxes on behalf of the businesses that use them. They just assist you so that you can do it yourself. Shopify is a really common one of these. So if you're unsure if a tool or platform that you use to make online sales is considered a marketplace facilitator, please verify that yourself. You can read FAQs on their website, call a customer service team, and you should be able to find out through doing that if they are collecting and remitting the sales tax on your behalf, or if you are supposed to be doing it. As promised, here's some additional resources you might find helpful if you're a remote seller. So the first one will take you to the Streamline Sales Tax Governing Board's website, where you can learn more about that program. Next are doors pages for remote sellers and another for frequently asked questions about remote sellers. Finally, I've listed doors page for marketplace facilitators, so you can learn more about those if you're curious. Now let's switch gears. While most businesses have a fairly good understanding of sales tax, withholding, and a lot of the other common business taxes they may be expected to file and pay, there is one tax type that businesses are often not as aware of as they should be, and that is use tax. Use tax is the complement of sales tax. If a seller buys something exempt from tax, but does not end up selling the item in a retail transaction, that seller will likely need to remit use tax on the purchase price of the item. Notice Indiana's use tax rate is 7%, just like sales tax. So one example where this would happen is with reclassified inventory. Let's say an office supply company buys paper tax exempt for their inventory to sell in their store. If they do this, they collect sales tax when the paper is sold to the end user and everything is as it should be. However, if they reclassify the paper and use some of it in the office printer in the back room of their office, the store would need to remit use tax on the paper taken from inventory and used in the store, since sales tax was never collected from that item and now it never will be. Another example of when to remit use tax is giveaways. If you're an electronics store and you're holding a giveaway for a new laptop, the store would have probably bought that exempt from sales tax for their inventory. So they then need to remit use tax on the cost of the item when they give it away. And it's important to note, the 7% use tax would be paid on the cost of the item to the store, not what its listed price would be if it was sold at the store. Use tax will also need to be paid when a vendor does not collect Indiana sales tax, which can happen sometimes in sales to other states. I'll talk about that more in a bit. You may be asking yourself why you should even bother paying use tax in the first place. And the reason is that most businesses will need to remit use tax at least occasionally. If you never remit use tax and your business operates for several years, that will look unusual, and it will probably flag your business in our system for a potential audit at some point. So it's in your best interest to remit use tax when you owe it, rather than wait until we eventually audit you or send you an estimated bill, at which point you're going to be dealing with not only what you owe, but also penalties and interest for not remitting it timely. Businesses that are registered for sales tax should report the use tax that's due on their monthly or annual sales tax return. So that's really easy to do. You just do it at the same time that you remit sales tax. You can also use Form ST-115, that's available on InTime, and that doesn't have a particular filing expectation or due date. It is designed for customers to self-report use tax due as necessary. So especially if you are an annual filer, you don't want to wait several months to remit use tax once you know you owe it, you can just do it whenever you want on InTime. One last application of use tax that deals with purchases made outside of Indiana. The Indiana use tax rate is 7%, and that's the same as our sales tax rate. Different states have different sales tax rates. So if you purchase goods from another state and their sales tax rate is less than Indiana's 7% rate, you're going to owe use tax to Indiana based on the difference between those tax rates. If you pay tax of 7% or more to the other state, you don't owe use tax to Indiana. But if you paid sales tax of less than 7% to the other state, Indiana use tax due is going to be the difference between those two states. So if you end up buying something from another state and their rate is 6%, 7 minus 6 is 1. So you are now going to owe 1% Indiana use tax to Indiana for use of that item because it is being used, stored, or consumed in Indiana. Okay, now that we've talked about use tax, let's talk now about what happens during an audit, what the collections process is like, how to do appeals, and how to keep good records. All important things for ongoing tax compliance. So audits can be really frightening to a lot of customers, and one of the reasons for that is because most people don't know what to expect if they get audited. We have created something called the Audit Manual to improve transparency in our procedures. I've linked to it here on the slide, and I'd really recommend reading through it if you'd like to learn more about the audit process. I'm going to give you the abridged version right now. If you've been selected for an audit, we notify you either by a letter, through InTime, or both. Know that if you're selected for an audit, it doesn't necessarily mean you've done anything wrong. Businesses can be randomly selected for audits, and if you're in business for a long time, there's a reasonable chance you could be audited at some point. So do not worry about it as a guaranteed result of you doing something wrong. Your auditor will schedule the audit at a time that works for both of you. The auditor will start their examination with an initial taxpayer conference. That includes going over business operations like products, services, and inventory control, related entities, business changes during the audit period, and they'll also tell you more about the audit itself, including the logistics and protocol, so you know what to expect. Then they're going to do their field examination. So they'll sit down and they'll review your records, identify potential issues, and finalize any adjustments. This usually takes about 3 to 10 days, though it depends on the organization and thoroughness of your records. After your auditor reviews everything, they'll sit down with you and explain their findings. You can have someone there to represent you at that final conference or at any point in the audit process. You'll just want to make sure that they have a POA on file with us in order to do that, which I talked more about in the last presentation. And if you disagree with audit findings, you always have the right to protest, which I'll cover in just a few slides. And the procedures and rights of protest will be provided at the final conference as well. Now, there are a few possible outcomes to an audit. It's possible that no adjustment needs to be made. It's also possible that you will get a refund. If you've been overpaying taxes, this absolutely can happen, and it's a nice surprise if it does. And then, of course, it is possible that it's found you have been underpaying taxes, in which case tax will be due and your auditor will tell you how much. And if this occurs, this slide lists the most common reasons behind this determination. Things like not remitting use tax, or doing exempt sales without keeping records of exemption certificates, failing to report sales and income tax, personal expenses that have been deducted as business expenses, failing to withhold tax on employees, not remitting trust taxes collected or withheld, just not keeping good supporting documentation. Most of these things we have covered in either of these two presentations. So anything that you can do now to address these potential issues and avoid them can help you have a successful audit if you're ever selected, or avoid being selected in the first place. And remember, audits are meant to serve as a method to correct tax filing mistakes made by customers. That can result in both underpaying and overpaying taxes. It's basically a way of checking your work. Our goal in an audit is not to collect the maximum amount of taxes possible from customers. It is to administer tax laws fairly, securely, and efficiently. That means We all have the same objectives of ensuring that the appropriate amount of tax has been paid to the state. No more, no less. So, how do you keep good records? Well, in the state of Indiana, you're generally going to need to keep records for at least 3 years from the date of your last filed tax return. That is how far back our audits generally go, but that is assuming that you are filing in the first place. If you're not filing your return, open statute applies, and our audits can go back as far as they need to in order to make sure that they are accounting for what you should have remitted. So please file and keep your records for the required amount of time. What kind of records should you actually be keeping? Audits of different tax types can request different records, and this table highlights examples of documents your auditor may ask for in 3 of the most common types of audits. You can use that as a reference to begin organizing your records so you know what to provide if you ever are audited. And when businesses are audited, DOR will generally review all applicable tax types for that business. So you might be asked to provide all of these. The audit manual and handbook have more information about record keeping requirements, so check those out if you want to learn more. Another part of our agency that can be sometimes frightening or confusing to taxpayers is our collection process. So let me tell you more about it. The simplest way to avoid any collection actions against you are to file and remit your taxes on time. Make sure your business is registered to remit the necessary tax types. You would be surprised how many people send us taxes without being registered first. Make sure you also stick to the filing deadlines for those tax types and keep good records that substantiate what you report when you file. If you ever go through a period where you do not collect or owe any taxes, that is just fine, but you will still need to file. You're just going to file what's called a $0 return. For example, if you own a seasonal business and it is closed for a few months each year, you're not collecting sales tax or withholding from employees during those months. But if you're otherwise a monthly filer, that means you would need to file a $0 return for those months where you are not in business. If you do not file the $0 return, DOR will assume that you have been operating as usual and just not filed. So you will receive an estimated bill based on what we think you owe, with penalties and interest because you didn't file on time for the period where you didn't file. It is very important, therefore, to file $0 returns when applicable. But let's say you do miss a filing period or otherwise fail to file a return for any reason. Here's a simple rundown of the collections process and what will happen. Initially, a failure to file is going to mean we send you a letter notifying you of the delinquency. If you act really quickly after we send you this, you're probably just going to owe some penalties and interest, and that's it. Failure to file after that notification will cause a NOPA, Notice of Proposed Assessment, to be issued. This is the estimated bill that I mentioned earlier. You're going to have 60 days after that's issued when you can file or amend your return if you just failed to do that, pay what you owe if you believe that amount is accurate, or formally protest the bill. If you don't do any of that within 60 days, a demand for payment is issued. This gives you just 20 days to take action, and you cannot appeal it. So one of those options gets taken away from you. If you don't do anything within 20 days, then a tax warrant can kick in. So it is really important to file and remit taxes owed on time. In addition to what I already shared, the later stages of collections can hurt your credit score, it can cause you to be referred to a collection agency, and it can even result in your RRMC being revoked. which would mean you couldn't legally conduct the retail transactions that got you into trouble. And in most situations, that's going to make it incredibly difficult, if not impossible, to legally do business until the situation is resolved. Sometimes taxpayers who receive proposed assessments and demand notices ignore them because they disagree with it. They think it's somebody else's responsibility to handle the tax liabilities of their business. If you're receiving communication from DOOR about collections, it is extremely important that you respond to it as quickly as possible. Even if you don't think it's your issue to deal with, you're receiving the communication because the business records indicate you're responsible for liabilities. So please get into contact with DOOR to respond. If you don't do that in a timely manner, you're going to lose out on certain options that make the collections process more manageable. And it's really important that you take action early in the process whenever possible in order to have the most options available to you. On that note, you can protest a notice of proposed assessment or even an audit by sending a written request and a copy of the bill to DOOR as long as you're within that 60-day window. The protest request letter needs to detail the reason for your protest and be signed and dated. And then the protest submission form has to accompany your written protest. We have a protest guide that is linked in this slide, and you can use that to find more details on protests and appeals and how to navigate that process. You can also pay a bill if you ever receive one, and frankly, this is what a lot of people do. You can pay electronically through InTime. To do that, you'll need a copy of your bill that includes your case ID number. You'll also need a TID or a liability number and the actual payment amount. So don't throw away that bill. It contains a lot of that information. If you'd prefer to pay by mail, that's an option as well. Mail your check or money order to the address listed in this slide, and remember to make the check payable to the Department of Revenue. We also offer payment plans. So if you'd like to make a payment but can't do it all at once, this is a fantastic option. Generally, in order to establish a payment plan, the amount of tax due has to be greater than $100. You can set up and make payment plans on InTime. You can also call our customer service team and ask for them to help you set one up. If you ever need to close your business or just a business location or a specific tax account, it is really important that you do that correctly to ensure DOOR is aware and doesn't send you estimated bills due to missed filing periods. You can close your accounts using Form BC-100, which you can either mail to us or e-file through InTime. It's going to ask you for your closing date, which should be the date of the last return that you filed with us. Please be aware, closing your business with DOOR does not end your obligations to any other agency. So you may need to notify other agencies of your business closure. That might include the Secretary of State, Department of Workforce Development, local governments, the IRS. Our business tax handbook has more information about this if you need it. Sometimes a business will also go through the process of registering their business and getting set up to pay taxes, and then for whatever reason, they will never conduct any sales. If this happens to you, you need to file $0 returns each period that you remain registered with us and owe taxes. If you don't want to keep doing that forever, you can simply close your tax account. Otherwise, DOOR will assume that you are making sales or collecting tax and just not remitting them, and they will send you estimated bills with penalties and interest. It's in your best interest to avoid that. So if that ever ends up happening to you, at least now you know what you're supposed to be doing. It's also possible that instead of closing your business entirely, you may just need to close certain tax accounts. For example, if you start with an employee and then you no longer have employees at a later date, that means you won't be filing withholding tax anymore. So you may want to just close that account. Or maybe you have multiple locations and you need to close just one of them. To resolve this, you're going to need to officially close that tax account with DOOR so that you're not subject to any of those estimated bills I mentioned earlier. Now, to close a tax account, you can either do that through InTime or you can file the BC 100 I mentioned earlier with DOOR. And once that's been processed, you won't need to worry about filing $0 returns for your unused tax accounts because they simply will not exist anymore. And the nice thing is later on, if you end up hiring people again or reopening that location, you can use InTime to register a new location or tax account again. It doesn't prevent you from never having those tax types again to close one. It just keeps you in compliance. All right, so before we wrap up, let's talk about a few resources that are available to help you as you start and operate your business. First of all, the New and Small Business Education Center is a fantastic starting point. It's a good way to find additional resources if you just want to do more research. The tax library also has a lot of excellent guidance documents. These are called information bulletins and departmental notices, and these exist on a variety of topics. They are a really good way to get more in-depth information about topics that are relevant to your specific business. So if there is an area that you want to do a deep dive in, look through the tax library in the sales, income, and general information bulletins and the departmental notice section. Read through the documents we have available there and see if there are any that are on the topic you're interested in learning more about. If so, read through them. It's going to be one of the best ways to get all the information you need on that topic. Our business tax page is also another really good place to find resources on our website. It has links to county tax rates, forms, FAQs, and a lot more. Lastly, the handbook linked here is meant to be a companion to this presentation. So if you want more information about anything I covered today, check that out. And if you would like to be contacted when we update relevant information bulletins, pages on our website, and so on, be sure to sign up for email updates. There are several categories, and you can sign up to get updated on any of them. I'd especially recommend the Tax Bulletin. That is our monthly newsletter for businesses and practitioners. It's just one email once a month. It won't clog up your inbox, but it will summarize a lot of useful things for businesses to know, like recent policy changes, new tax rates, new deadlines, new hours of operations for various offices that we have, a lot of stuff that might be useful to you. The way you can get these email updates is go to the Contact Us page of our website, and then click on the box on that page that says Sign up for DOOR Agency Announcements. Enter your email address, and then select whatever topics you're interested in. If you have questions about anything at the federal level, remember, the IRS is where you're going to want to go. The first link on this page is a great place to find additional resources for new businesses at the IRS website. And also, our presentation today was focused on Indiana. So if you want to learn more about how state taxes work in other states, especially if you are a remote seller selling into other states, I really recommend checking out the IRS link provided in the second bullet point here, which has pages for each state, including links to that state's revenue agency and some other helpful links for people who are doing business there. There are also a lot of ways to get in touch with us if you need to. I've provided our business tax phone line here. That is the main phone line where you can call us during weekdays and ask us questions if you have them. If you have an InTime account, you can send a secure message through InTime, and that's one of the easiest ways to ask us questions at any time of day or even on the weekends. Also, we have district offices located across the state, and you are welcome to make an appointment to visit us at any of them. please do use that link to make an appointment before stopping in. Some offices require appointments, and that's a good way to reach out to us if you need to sit down and talk to someone in person about your question or issue. Finally, if you have a complicated issue, something that our general customer service team can't help you resolve, perhaps, particularly if you are dealing with financial hardship issues. Maybe you're in one of those later stages of the collection process, for example, or you are worried about getting into them. You can contact our Taxpayer Advocate Office. The link here at the bottom of this slide is a way that you can learn more about who they are, what they do, and how to get in touch with them. They're an excellent resource at the Indiana Department of Revenue, and they are very happy to help you if you're ever in need of their assistance. And that is it for now. Thank you all for your time and attentiveness. We're really happy to be able to work with small businesses like you to make sure you're informed and compliant of Indiana's tax requirements. I hope you found this information helpful and are feeling more empowered to handle your business tax obligations. And remember, we're here for you if you need us. So thanks again and have a good day.